I think we're yet to see sort of like a lot of true long-only buying that isn't influenced by sort of interest rate trades that are endogenous to the crypto ecosystem. Once we see that, then I think we're going to see a lot stronger sort of base case for bullishness for Bitcoin ETF asset accumulation.
Hayes begins by addressing the growing interest in Bitcoin ETF, which many believe signals institutional confidence in Bitcoin. However, he clarifies that many large funds are not taking long-term positions in Bitcoin because they believe in its future. Instead, they're engaging in basis trading. This means that hedge funds such as Millennium are buying Bitcoin ETF while selling Bitcoin futures on the Chicago Mercantile Exchange. These institutions are leveraging discrepancies between the spot and futures markets to secure profits rather than showing true faith in Bitcoin as an asset. In the past 6 months, Bitcoin prices have been relatively flat or slightly declining. This market stagnation has led to outflows from Bitcoin ETF as many institutions are unwinding these basis trades.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
So quite an interesting phenomena is happening with these Bitcoin ETFs. If you look at, I think it's the 13th filing in the US where large funds have to disclose their holdings on a quarterly basis. You saw the top of the list were institutions like Millennium, large hedge funds, right, who owned all of these Bitcoin ETFs. Now, a lot of people think, oh, wow, Izzy believes that Bitcoin is valuable, but that's not the case. They were putting on basis trades. So these large funds would buy the Bitcoin ETF and sell the CME futures contract and earn a very good return, I don't know, whatever the basis was at the time. And so as that basis has come in, as the Bitcoin prices fell and gone sideways for the past 6 months, you started seeing these institutions selling Bitcoin ETFs in the cash market. And that's kind of why you saw sort of net outflows over the past few weeks. So it's going to be interesting to see the next quarter's disclosures on whether those who are at the top are now, much lighter positions as they've unwound these trades. So I think we're yet to see sort of like a lot of true long-only buying that isn't influenced by sort of interest rate trades that are endogenous to the crypto ecosystem. Once we see that, then I think we're going to see a lot stronger sort of base case for bullishness for Bitcoin ETF asset accumulation. So, I mean, Bitcoin is the original OG coin, right? It's why we're all here. It's the hardest money ever known. It's the reserve asset of crypto. So I think as Bitcoin goes, the ecosystem goes, right? If Bitcoin goes to $1 million, then alts are going to go to some crazy values. If we don't support the Bitcoin network and don't support the folks who are updating Bitcoin Core, and we allow the state to take down this thing that we've built, then we're all at risk of bad things happening to the ecosystem. So I think it's incumbent upon those who can afford to do so to support developers who are devoting their time and energy to upkeeping the thing that started this whole movement. I think that if Bitcoin wants to be the hardest money ever known, then upgrades have to be slow, right? Because the last thing we want to do is put something into production that's going to endanger what we've spent the last 15 years building. Nor do I believe that Bitcoin needs to stay the same, right? The whole point is that it changes with how people want it to change, but obviously in a slow and methodical and safe way. I mean, of course, the deflationary or disinflationary impacts of the halving will be felt when the market's ready for them to be felt. I mean, maybe it's not now, maybe it's in a month or two, I don't know. I think one of the bigger concerns for miners right now is you now have this competition for AI data centers, right? There is this insatiable demand for power and for compute from training large language models, LLMs. And so now if you're a Bitcoin miner and you have access to this power and you have a data center, you could do Bitcoin mining, you could do, AI training, right? And so it's going to be interesting to see how that plays out in terms of the economics for large scale Bitcoin mining. I think it's calm before the storm. I woke up this morning, I took a look at the announcement, 0.5% rate cut. I took a look at dollar yen. It was like 142, a little bit weaker. I think just before I stepped in here, it's almost like 144, so weakening slightly. Bitcoin's up post the announcement. But strangely enough, the 10-year Treasury yield is actually up 2 or 3 basis points from the announcement. So I think that's interesting sort of dichotomy about the market. You would think that yields would come down even further because I think now for the November meeting, it's almost like a 70% chance the market believes the Fed's going to cut again at least 25 basis points. So I think it's too early to tell. It would be very interesting to see how crypto trades over the weekend once TradFi closes, because for what seems to happen is you get the initial reaction, and then the real reaction is going into the close on Friday for TradFi markets, and then crypto follows up either up or down over the weekend. And so that's when we really see what the market really thinks about what just happened. Obviously, I have a macro view that Jay Powell and Janet Yellen want to use financial markets to help Kamala Harris win the election. And obviously this sort of fits within that thesis, because if you look at the US economy, it's extremely strong. GDP growth for third quarter this year was about, I think, 2-point-something% positive real growth. There's still unemployment is still quite low on historical standards. And why is the Fed cutting rates? It seems like the current rate regime was perfectly fine with a growing US economy. So what was so bad that they needed to cut a 0.5%, largest rate cut since March of 2020? I believe that they're trying to get markets to go even higher to make people feel even wealthier as they go into the ballot box in November. And inflation is going to accelerate after this point, because if people have been saying that the US government has been recklessly spending money, how does making it cheaper for them to borrow help that position? I think that the yen is going to continue to strengthen. And if the Fed and the market believes they're going to continue to cut rates, and the BOJ has continued to say we are still on a rate rising path, so that differential is going to narrow over time. If you are in a leveraged yen carry trade, you need to be exiting that trade, because both sides of the pond are telling you, on the one hand, we're cutting rates on the US dollar side, and on the Japanese yen side, we're going to raise rates. So it's imprudent for risk management for you to keep that position on. So I believe that slowly, then quickly, people are going to be selling foreign assets, foreign meaning not assets outside of Japan, and buying back the yen because they need to cover this trade, because it's going to go against them, I think, in a big way over the near term.
Hayes also touches on the intersection of politics and crypto, dismissing the idea that Donald Trump is pro-crypto. Despite Trump's claims, Hayes argues that he did little to advance the crypto industry during his presidency. Many of the regulatory hurdles crypto companies face today, such as those involving agencies like the SEC, were established during Trump's time in office. He suggests that politicians, regardless of party affiliation, may pay lip service to the crypto community to secure donations, but are unlikely to push meaningful regulatory change. Instead, the global movement for financial freedom and the decoupling of money from the state will continue to grow, regardless of the U.S. regulatory stance.
I find it quite strange that a lot of people in crypto think that Trump is pro-crypto. Trump was president for 4 years. He had perfectly, a blank slate to do whatever he wanted to do, and he did nothing for crypto. A lot of the people who are in these agencies, came in under a Trump administration. So I don't believe anything he says. He's a politician. There's a lot of crypto money that wants to donate to politics. He's happy to take it and tell you what you need to hear. In terms of Harris and the Democrats, you know what they're about. You've seen the last 4 years in terms of the policies that have been put forward. But I think at the end of the day, the United States is a very small place in terms of population. Obviously, it has a very large economy and whatnot. But take a look at this conference, right? Last year, I think they sold 10,000 tickets. This year, they sold 20,000 tickets. So there's a global movement to get financial freedom, to divorce money from the state. And if the American regulators want to try to keep everybody out of their little pond, that's fine. Let them do that. But at the end of the day, we're going to move forward. We don't need regulatory clarity from the United States government. If they provide it, great. If they don't, it's just the same as it's been since 2009. And we've grown from zero to whatever, $2-3 trillion market cap of a crypto ecosystem. So I think people need to stop worrying about it. If you want to launch a business in the US, then obviously you need to worry about those things. But if you're constrained about what do I do, then just ignore America. There's a whole wide world out there. Look at this conference. It's absolutely insane. The amount of energy and people from all around the world have come here to sort of build a bright new future. Let America be in the past. So I've been trading crypto for over a decade now. I obviously was running BitMEX for a period of time, and we've experienced all sorts of different types of outages. Obviously, the biggest one was the March 2020 DDoS attack when the exchange went down, and people thought we saved Bitcoin from going to zero or whatnot. But again, these things happen, right? There are malicious actors who are looking to take down, especially front ends, and trick people into sitting their assets where they shouldn't be going. And at the end of the day, it's incumbent upon the protocols to make sure the actual base technology is safe. The Athena protocols reassure people that the actual funds that are staked with the protocol are unaffected. This is purely a front-end issue. This is, part and parcel of dealing with electronic, things. I mean, it sucked. Well, it wasn't fun. I'm not gonna lie. I wish it didn't happen. I think it's part and parcel of running a centralized company in crypto, right? CZ is facing more serious sort of things. And, you have Ross serving a life sentence. You have other people who've fall afoul of US regulations. So I think if you run a centralized company in crypto, these are the sorts of things that can happen to you. It also shines a light on what decentralization actually means. Like, we have a lot of these centralized companies. They're subject to these sorts of risks. If that's something that you're comfortable with, then you might need to choose a different line of work. So, I mean, BitMEX is fun. Obviously, I made a lot of money. I'm still on the board. I haven't sold a single share of what I own in BitMEX. Running a 250 person company, not really my jam. There's a lot of things in HR and being the CEO that I didn't really enjoy. And so having the opportunity to work with a very small group of dedicated financial professionals, investing and trading and trying to make money is a lot more enjoyable for me. And so I really love what we're doing at Maelstrom and the people that I work with. It's a lot of fun. I love financial markets. I love talking about them. I love writing about them. I love investing in projects. So I'm having a blast at Maelstrom.
Drawing from his own experience, Hayes reflects on the challenges of running a centralized crypto company like BitMEX. He recalls the infamous DDoS attack in March 2020 that took down the exchange during a critical moment in the market, nearly crashing Bitcoin to zero. While these outages were frustrating, Hayes emphasizes that such risks are part and parcel of operating centralized platforms. The risks associated with running centralized companies in crypto highlight the importance of decentralization, Hayes argues. However, for those who choose to work in centralized crypto enterprises, they must be prepared to face the potential regulatory and operational pitfalls that come with the territory.
Please like and subscribe my channel.